Welcome to Whitefield's full year results update to March 2022. I'm Monica Knight and I'm here today to speak with Managing Director Angus Gluskie and Director Will Seddon. Angus, the period just ended was Whitefield's 99th year of continuous operation. Core profit after tax rose to 16.2 million. This equates to earnings per ordinary share of 14.3 cents. Angus, that's a 60% increase on the prior year. Can you tell us more about that result?
Yes, the strong growth in this year was primarily driven by dividend increases across the majority of our investments, with many companies benefiting from the lifting of COVID restrictions and a return to stronger economic activity. Some of the larger dividend increases were seen in holdings such as Seek, Incitec, Origin Energy, QBE, Aristocrat and the major banks. Vicinity Centres and Ramsay Healthcare also contributed. Total operating expenses remain carefully controlled, amounting to 0.4% of assets, a slightly lower percentage than the prior year.
In addition to core profit, which consists of dividend income, the company also benefited from an uplift in the value of the portfolio and an accounting gain on the reset of the Whitefield preference shares. Can you expand on that?
Following a rise in portfolio values of $75 million after tax in the prior year, Whitefield's portfolio grew by a further $25 million after tax in the year to March 2022. So once again, the widespread uplift in economic activity as the pandemic subsided was a key contributor to those outcomes.
Okay. And Whitefield has now declared final dividends for the year. Angus, when will these be paid?
Final dividends will be paid in mid-June. As we'd indicated in our quarterly presentations, our ordinary share dividend was maintained at 10.25 cents for each half year, or 20.5 cents in total for the full year just ended. So this is the 32nd consecutive year in which Whitefield has maintained or increased its ordinary dividend since the start of the dividend imputation system in the late 1980s. And in addition to ordinary dividends, a dividend of 131.25 cents will be paid on the company's WHF PB preference shares. And both ordinary and preference dividends will be fully franked at the company tax rate of 30%.
Turning now to investment outcomes, Whitefield's investment portfolio generated a return of 10.4% for the year and 11% per annum over the last 10 years. Can you expand on that, Will?
Sure, Monica. The year to 31 March was a tale of two halves. In the first half, a strong market rally saw our industrials benchmark benefit slightly more from takeovers and COVID surprise than Whitefield's portfolio, while in the second half, the market became nervous about rising inflation and interest rates, and Whitefield's returns benefited from an underweight exposure to expensive and fragile growth stocks and a positive tilt towards more resilient businesses. Holdings in Computershare and the major banks performed well over the year, with the market viewing those businesses as beneficiaries from rising interest rates. Strength of global demand for fertilisers benefited Incitec, and continued demand for staple goods was favourable for Metcash's earnings.
And as we move into 2023, can you comment on the positioning of the investment portfolio?
Well, at year end, we maintained overweight exposure to selected businesses in banking, fertilisers and agriculture, and underweight exposures to real estate, certain healthcare companies and diversified financials. Recently, we've been increasing exposure to consumer staples, logistics and utilities, and decreasing our exposure to consumer discretionary and construction-related businesses.
And can I ask, what's behind your thinking on those exposures?
Well, as we move through 2022, the market backdrop is very noisy. Markets are having to adjust to rapidly rising inflation and interest rates. Global trade in many goods is being materially impacted by Russia's invasion of Ukraine, Western sanctions on Russia, and China's approach to managing COVID. And each of these influences can change quickly and unpredictably. In this environment, we believe higher quality businesses with good profitability, strength of cash flow and strength of competitive position are best able to absorb inflationary pressures and to manage unpredictable change. The outlook for more fragile growth businesses may well be less favourable. Interest and operating costs are rising and funding will be harder to obtain. Importantly, Whitefield's systematic approach is designed to progressively identify and respond to change efficiently across our investment universe.
And Angus, are there any concluding comments you'd like to make as we move into 2023 and Whitefield's 100th year of continuous operation?
Sure. Whitefield was founded in March 1923 to provide shareholders with an efficient, professionally managed investment structure. And our focus on investing carefully and systematically, while steadily enhancing our investment process, has allowed us to navigate the many challenges of the last 100 years. So our board and the investment team certainly now look forward to providing the same reliability for our shareholders over the upcoming decades.
Thanks Angus and Will for that market update. Further information on Whitefield and our results can be found in our financial statements released to ASX and on our website whitefield.com.au.